Closer look at what's happening in China's manufacturing sector with Dan McClory. He's Managing Director at Bonwick Capital Partners. Dan, always a pleasure. Good to see you.
Good to see you, Michelle.
Dan, China's manufacturing PMI coming in with the weakest reading since late 2011. Now, we know the economy is transitioning away from manufacturing. So is this a concern, or is the contraction still too severe even in the context of rebalancing?
I think it's a concern. I think we also have to look at other global economies. You know, this is the fifth straight month that the U.S. has suffered a manufacturing decline. This is the seventh straight month for China. So we can keep it in some sort of context there. But I think there's probably two fundamental problems that are facing Chinese manufacturing right now. One is SOE reform. It's badly needed, and there's a lot of overcapacity. And two is, and Tim was getting at this, somewhat of a misallocation of capital, where the big banks and their lending dominates instead of a stock market, which in other growth economies is increasingly being used to help weed out the good companies from the not so good companies and have a more merit-based system of who gets the capital.
The services sector showing expansion over 50, but not as high as expected. How concerned are you about that?
I'm not. Again, I would go with Tim's comment, which is we have to keep in mind a seasonal adjustment here based on the Chinese New Year, traditional slowdown factors. So this is probably, if there was ever a month of anomalies that can be easily explained away, I would attribute the sluggishness in services to that and not any other larger macro factors.
Well, Dan, as you know, the world is watching China very closely. The global economy is certainly concerned about China's rebalancing. It has been for a while. G20 leaders met in Shanghai this week, and then the People's Bank of China government said that China will strike a balance between growth, restructuring, and risk management. The IMF head, Christine Lagarde, says that China faced, quote, an overwhelming agenda of structural reforms. So, Dan, what is the expectation here? What would global leaders want and expect China to do as it rebalances?
Well, I mentioned one of the themes, which is the restructuring of state-owned enterprises. I mean, even Premier Li, as recently as December, said it's time to start to rationalize. He actually said take out the knives for the zombie enterprises. So there are companies with serious overcapacity that need to be brought back into reality. And this happens more with privately owned companies because eventually they run out of capital. With state-owned enterprises, sometimes they can continue to be financed. So I think that's one area that global economists are looking at for reform in China. And the second one, again, is the misallocation of capital. I think if the stock market opens up and there's, again, a more merit-based system of awarding companies capital through a registration process and showing that equity capital can somewhat deleverage the economy in China, which finances companies, I think those would be two very positive signs.
Well, in terms of moving in another direction, China's five-year plan will be released this month. It is expected to further stress that it's shifting its strategy away from manufacturing and also to include a big focus on innovation. Is innovation the way forward for China? How can China maintain GDP growth by focusing on innovation?
I think innovation, Michelle, is absolutely the way forward for China. And you've seen this happen in many different ways. China started out by requiring innovation be opened up for companies that are foreign doing business in China. You've seen it through the acquisition of intellectual property that's coming into China. But undisputedly, one of the sectors of innovation for China is the internet, mobile, and e-commerce. So China leads the world in those categories, and it will continue to innovate. And as you see the old world economy moving to the new world economy, China is very much at the leading edge of that. So I would expect to see much of the messaging in the new five-year plan to revolve around those three critical areas: mobile, e-commerce, and the internet.
All right, Dan, in the next few days, Premier Li Keqiang expected to announce China's GDP target growth rate for 2016. What are your expectations there?
You know, they're from between 5.3 and 5.5%. And I know that sounds maybe a little bit on the low side considering wanting to achieve somewhere close to 6%. But I think anywhere in those mid-ranges would be within an acceptable degree of tolerance. And as we saw today with the manufacturing figures, it really did not affect global stock exchanges. There was really not any type of anything bordering on a reaction that we might have otherwise seen. So I think the world is understanding that this rebalancing is occurring, and they see it happening on a very measured basis.
Okay, thanks as always, Dan McClory, Managing Director at Bonwick Capital Partners.